Hello, welcome to Decode Your Budget 2017. It was a budget which was filled with anticipation and true to as we expected. The budget has been pro-poor, pro-farm, and also has a lot of sops for the small and medium enterprises. Clearly, the markets cheered the budget, and we saw that rally happening in the equity markets. The key areas and the key pointers that were there in the budget, I'll probably discuss over the next 10 minutes or so, and then we'll take up a few questions and we'll probably end it in another 15 minutes or so. If you look at the budget, clearly the focus was on ensuring that our agricultural productivity and our agriculture improves significantly. And to that extent, the government has actually had an outlay of 10 lakh crore rupees. Uh, the vision for the government is to increase the farmers' income or doubling the farmers' income in the next 5 years. And to that extent, we believe that the entire space in fertilizers, agri, will actually do very well from a sectoral point of view. Also, the tractor industry and all the industries which are rural linked will actually do very well. Linked to the rural is the housing for all. And if we look at what the government has done, it has actually given infrastructure status to the low cost housing. The government's view has been that 2000 till 2022 they want housing for all, and to that extent the infrastructure status to the low cost housing will mean that uh, the interest costs for developers is much lower than what they are paying today, and it makes housing even more affordable. Clearly, a good decision from the point of view of ensuring everyone has homes, and the sectors which will benefit will be clearly cement, the low cost housing developers, to an extent steel, and this should augur well for the entire real estate in general, and that was also reflected in the markets as you would have seen. If we see the other focus areas which the government has taken up, it is drinking water and sanitation. The allocation to drinking water and sanitation has gone up by almost 35%. And the other infrastructure push which has been there has been in roads and railways. Clearly, this government wants to ensure that every village, every taluka has roads, and to that extent, they've already built about 1,33,000 kilometers of roads. And we believe that roads and road allied industries are going to do very, very well. And railways, in terms of their focus, so government has outlined about 1.31 lakh crore for railways, and a lot of the impetus has been given to safety and cleanliness as well on the railways, which the minister mentioned in his budget speech. If we look at what is happening on the digital front, a lot of thrust in the budget was given on cashless transactions, on the Bhim app as well as the Aadhaar Pay, which is going to probably be launched. So clearly, the government is trying to attack the so-called the fight with black money with taking our economy on the cashless path, and the very fact that Bhim and Aadhaar app is going to probably help in terms of bringing the entire Indian society in the net of it will be possible for them to do transactions online or through the apps, and which will ensure which will reduce the requirement for cash. If we see on the fiscal side, clearly our macro has been improved significantly over the last 3 years. We've seen a great benefit from falling oil prices, and our current account deficit also has come down on account of that. With our current account deficit coming down, the pressure on the rupee has come down significantly. And that means that the investment which was probably going in gold as a hedge against inflation and rupee depreciation is no longer going to happen. Hence, the beautifully managed current account deficit and fiscal deficit by the government, the target for which has been kept at 3.2% this year for fiscal deficit and 3% next year, means that our economy is going to continue to remain in a good macro environment shape. Our rupee is going to remain strong. There is very low likelihood of rupee depreciating significantly, and to that extent, government is kind of pushing financial investments or financial investments in financial sector rather or savings in financial sector rather than the savings in physical sector, which used to happen before 2013. To that extent, I'll also like to highlight there's a provision in the budget which says that if you've sold a property and you have capital gains, there are more number of financial instruments which are going to be available for you to park that capital gains, which is also a brilliant move in our opinion in ensuring that the returns from real estate can actually be funneled into financial assets. And as we all know, the more the savings go into financial assets, they are put to use in terms of capital formation, which leads to investment, which leads to job growth. So clearly, It is good from an India point of view that financial investments are being given a lot of fillip, because that ensures that interest rates are going to come down. And when interest rates are down, it essentially means that equity markets do well, job markets do well, and incomes actually go up because capital formation is cheaper. If we look at what the government is doing in terms of changes in the taxation, there is again some amount of taxation on the rich class. Those who are earning above 50 lakh, they have 50 lakh to 1 crore. There is a surcharge of 10% on the tax outgo, and above 1 crore, there is a surcharge of 15%. So that should help in terms of the tax break that the government has given to those who are in the 2.5 lakh to 5 lakh bracket. So those who are in the 2.5 lakh to 5 lakh bracket, the government has reduced the taxation from 10% to 5%. Net, this is actually going to lead to a loss in terms of revenue for the government to the extent of 10,000 crores. But still, to enhance the tax bracket on the lower end of the spectrum, they've actually given this SOP for those who are earning anywhere between 2.5 lakh to 5 lakh. If we look at from a sectoral point of view, clearly the government's impetus is to ensure that the infrastructure does well, and low-cost developers will get benefit from whatever they've done in housing. Uh, on the government PSU space, there have been significant announcements on the PSU side. The minister in his speech actually mentioned that they are looking at consolidating, merging, and bringing out synergies in PSUs, and also listing of many of the PSUs which are currently unlisted to unlock the value and to bring in more transparency in terms of how they are run. And to that extent, we already know that the general insurance companies are going to get listed in the next year or so, and many more PSUs will get listed. And there was also a mention of a single large oil giant. We've seen that in the internationally, many of the companies or countries have very large oil companies, which helps them in terms of synergy, which helps them in terms of bargaining power when they are trading as far as oil is concerned. So that should also do well as far as the Indian oil PSU basket is concerned. To conclude, essentially the way we see the budget is that it is a pro-poor budget, yes, but it has done enough to give enough impetus on the MSME side, also on the medium and small sector as well. They've reduced at one shot the taxation from 30% to 25% for those companies which have a turnover of less than 50 crores, which essentially means that they are also incentivizing many of the partnership firms to actually convert into companies, which is also good from a tax compliance point of view. So clearly, India today is in a good space when it comes to garnering a lot of share, which will come from globally from bonds. As you would know that globally bonds are seeing significant amount of yields increasing after a bull run which has happened in the last 8 years. And so the bond money which is lying abroad, which probably get converted into equity or equity money, and it will come into India and in emerging markets. And I think that is going to be something which will lead to a fillip in terms of the next 2 to 3 years in terms of the flows as far as India is concerned. Also, in terms of the earnings growth, we've seen over the last 5 years when inflation has been very, very low and the companies have not been reporting good numbers, the earnings have actually not seen any growth. Over the next 2 to 3 years, we are of the belief that the earnings growth will come. And because interest rates are low and only going to get lower probably, the price to earnings multiple of the equity markets can actually see a big re-rating on the higher side. So with low interest rates and physical assets like gold and real estate probably not going to see too much of attraction, there is a chance that equity markets, which we've seen over the last 1 year, 1 or 2 years or so, have garnered a lot of the domestic savings, and that will continue over the next 2 years, is what we believe in. Uh, with that, probably I'll conclude on the budget and take up a few questions. We've already received a few questions, and I'll probably speak about the questions and then answer them as well. So the first question is essentially, which sectors are going to benefit out of the budget? Like I mentioned in my earlier talk, the sectors which will clearly benefit out of the budget are one, infrastructure. Within infrastructure, if you look at the road developers, the low-cost housing developers, the cement sector, the housing finance companies lending to the low cost. These are the sectors which are going to benefit as a direct correlation to the infrastructure status that has been given to the low cost housing. We believe that the PSU sector itself as a pack can actually do well because the government's focus is on ensuring the efficiency and good capital allocation as far as the PSU sector is concerned. And in general, if the economy has to grow and our nominal GDP has to grow, the banking sector, especially on the private banking side, and the NBFC sector, especially the rural focused NBFC sector, can do actually reasonably well. The second question is essentially what is our view on the market in the long term? Uh, Clearly, India's growth or the growth story of India has just about started in terms of seeing that J curve once we've crossed $1,600 on the GDP. We've seen in the past, in the last 40 years, that whenever a country has crossed $1,600 on the GDP, be it Japan 40 years back, be it some of the other Southeast Asian countries in the last 20 years or so, and China about 15 years back, whenever a country's GDP crosses the $1,600 mark, the consumption, the demand, the domestic demand significantly improves, and that leads to a significant re-rating in the domestic sector and leads to a higher GDP as well. So we are also of the belief that India is going to see a good run as far as its GDP is concerned, and that should translate into the growth in the corporate sector, and that will ultimately lead to a higher or better returns in terms of the stock markets or the equity markets. The third question is what is our view on the debt funds post the budget? Clearly, debt has seen actually a significant amount of, if we see 2015 beginning till now, debt funds, especially on the longer duration, have actually seen a good return. The yields in the 10-year government GSEC have come down from 8.8 to almost 6.4 as I speak. And we believe that though next 12 months may still see some softening on account of maybe two cuts on the RBI front, we are at the last leg of the interest rate easing cycle in India. And to that extent, accrual category within the debt funds is something which may be looked at, and the shorter term category which may be looked at. But from a longer end point of view, or the long end, long duration funds are something which we are not recommending right now. So from a debt investment point of view or a debt market point of view, the accrual category and the short term category is something which we like, and that can be looked at from an investment point of view, especially in a lower or falling interest rate scenario. Those funds should be a good fit in the asset allocation of an investor. Thank you.
ICICI Prudential Mutual Fund. Tarakki करें. Mutual fund investments are subject to market risks. Read all scheme related documents carefully.